92% say the Fed will cut. 66% say the Fed should cut. 100 basis points total of cuts in 2025 and 2026. So we're not far from the end here. 320 is the average funds rate for our 38 respondents for the end of 2026. December 2025, just a couple months from now, the Fed will end QT. Richard Bernstein, CEO of Richard Bernstein Advisors, writes into the survey, politics rather than financial conditions are clearly influencing the Fed's rate decisions. Financial conditions are near historically easy. Financial assets are ripping, and inflation remains well above the Fed's target. In more normal times, there is no way the Fed would be cutting rates here. I think Zervos is going to have some comments on that. There I am commenting on my own commentary. In more normal times, the Fed would be seeing economic data, but it's not due to the shutdown. 45% of respondents think the shutdown ends in October. 34% say it takes until November. The respondents on average say it costs the economy about 0.3 percentage points per month when the government is closed. But most of them say the economy gets it back after it reopens, with 39% saying at least some of it, 55% saying all of it. 8 out of 10 say it will have no effect on the stock market. That looks pretty obvious. But there's some concern about the Fed making all these decisions without data. Only 5% are extremely confident they have an accurate picture of the economy with the data they're currently getting. 71% saying they're somewhat confident. 24% say not at all. Guy Labas of Janney Montgomery Scott writes in, is it Labas?
Labas.
Labas? No S?
He's French.
I love it. Anyway, he says the Fed is flying in a blizzard with a blindfold on and no backup instrumentation isn't a great place for monetary policy. It's even worse than there were mountains in the area. In equal percentages, respondents worry that the lack of data could cause the Fed to cut too little or cut too much.